But we thought we'll get in the management of V-Mart and figure out why the stock has gone up more than 25% in just within 1 week's time. It's one of the best performing departmental stores as well. So let's chat a little bit more about the business model. What kind of growth story can we expect? Anand Agarwal, CFO at V-Mart, joins us on the show right now. Anand, hi, morning. About 85% of your revenues, Anand, are coming from products priced below 1,000 rupees, which also, comes under the 5% GST slab. Now that it's been a year since the tax reform, tell us a little bit about the quantum of benefit that you saw post this transition of the reform.
Hi, good morning. And yes, I think GST has been extremely good for the industry and especially for us. We've seen a lot of benefits coming in from GST, be it in terms of simplicity of implementation, be it in terms of logistics, be in terms of customer preference, getting customer to like and come to organized retail. It's been a good journey, and I think it's been a game changer not only for us but for the entire nation. It's a very pragmatic move, and because we have always been a value for money retailer, and with a low tax rate of 5%, the customers at the the middle and the bottom of the pyramid have continued to see value in the products being sold by us. So I think it's been a very attractive proposition, and GST has definitely helped the company and also the customers in building up a good story.
Retail strategy then. Your presence in the tier 4 markets has grown very sharply, as I understand, in the last 1 year. Is this a market you're exploring and you're looking to scale up in, or will we see a simultaneous expansion in tier 1 and tier 2 cities as well?
Yeah, we continue to evaluate all territories, whether it is tier 1, tier 2 or tier 3 or tier 4. Yes, tier 4 has particularly been good for us, and while we've started this pilot only a year back, we now have close to 22 stores in tier 4 towns, and while it's just been a year, but the early results seem very promising, and because of the very nature of tier 4 towns, there is a huge amount of headroom available in that kind of geography. So if if we continue to look at the results that are coming in from all these stores that we have opened in tier 4, and the financials for each of these stores look very similar to what we have seen in tier 3 or tier 2 towns, and that is something that really excites us. So I'm not saying that we will only open stores in tier 4. We are also opening stores simultaneously in tier 2 towns as well as tier 3 towns, but we continue to remain very optimistic for tier 4 towns.
Agarwal, hi there, good morning. Let's talk about your same-store sales growth. What has it been for the year gone by? What is it that you're aiming for the current fiscal, and how do you hope to prop up your SSG growth?
So last year had particularly been very good for us after a bit of demon and then GST implementation, but because in the territories where we operate, we continue to see a lot of customer traction. So while on a full year basis, we closed the year at 9% SSG, which was again on a back of 13% SSG in 16-17. So if you look at the last 5 years, our SSG has grown at a CAGR of around 8 to 9%. And we continue to remain optimistic that even in this year we are internally target between 8 to 9% SSG. Having said that, I think the first half of the year should be a little soft because of the very high base of last year. Last year Q1 particularly, we had a very strong quarter, and we had a 23% SSG base. Beating that, or even coming into the strong territory will be a bit challenging, but on a full year basis, I think 8 to 9% is something that we would want to target internally.
To 9%. And what about investing in data centers and analytics? How critical is this for a retail company like yours? And don't you think that technology and connectivity is still a bit weak in some of the smaller towns? So how will these investments, or how will a thrust on this help you to attract or study consumers in some of these smaller towns and areas?
Yes, absolutely. I think technology has been the biggest backbone for our company, the strongest, pillar for our company, and we have continued to invest very heavily into technology over the last 15 years since the time the company has been there. We already have a very strong, one of the world's best retail analytics platform, which we deployed last year. We've also set up a in-house data center for our private cloud last year. We've also invested very heavily into the warehouse automation projects. We already have embarked on a customer analytics journey. So there are a lot of benefits that we look to get from retail analytics and technology implementation. In fact, 95% of our store dispatches which happen every day are automated and which come from almost AI controlled algorithms. So we remain very optimistic and very focused on improving technology deployment in the company, and we look at that as a very strong way to grow in the future.
Right. Anand, what about the contribution of your private label revenues as a percentage of your overall revenues? Because as I understand, there has been a sharp surge there as well. Can we expect the share to go further up? And if so, what is it that you're aiming at as a percentage of your revenue pie?
So private label has been a strong strategy for us. So while we do not differentiate between the profit margins or the retail pricing as far as private labels or market labels are concerned, but that's a thought out strategy because we want to focus more on volumes. But having said that, I think the private label business has surged to almost 54% of the total business for apparel this year. And we have a target to take it up even further, up to 70% in the next 2 years.
Okay. You're also looking to treble your revenues over the next 5 years, as we understand. Do you believe the rural strategy will help you achieve that? And if so, what are some of the key triggers and factors that you're betting on?
Yeah, I think growth is something that we've consistently been very particular about. So we've been growing at around 27% CAGR for the last 5 years on top line. And I think going by that past record, I think the growth numbers that you mentioned definitely should be on the radar. Yes, rural has been a very great push for us. So tier 4 towns in particular, the early results that I was talking about earlier, we see a lot of potential in the rural areas, semi-urban areas as well. So tier 4 towns and tier 3 towns is the segment where we would want to continue to expand our presence. And just to give you a perspective, probably in India there are more than 4,000 towns where a store like V-Mart can be present. And we are currently operational in only 141 towns. So that gives us a lot of room to play, and yes, rural is something that would be very close to our heart.
Now let's talk about the kind of stock price movement we've witnessed, Mr. Agarwal. Your shares have risen over 10-fold ever since your listing. Investors on the street are turning a little bit cautious when it comes to the valuations overrunning your fundamentals. So at a time like this, when valuations are skyrocketing, what would be your message to the investors? Do you have enough margin safety and a favorable risk reward to depend on when it comes to V-Mart as a business?
I think valuations are something that best left to the analysts and the investors to understand. But from a company perspective, I can only say that we've been performing consistently, and we hope to continue to do that, in the coming years. So we are not really extremely focused only on top line growth. We have been a profitable company right from our first day of operation, first year of operations for the last 15 years. And we look at every store to be a profitable operation, like a separate company. So we focus only on business, and we focus only on making that the fundamentals are right for every store, every operation, everything that we do. Valuations are actually best left for the markets to decide. So it's just an outcome of what we do, and we really have not come out with any more secondary offers or any other offer for sale. So that's really not something that I can comment on.
Now, analysts believe that the margin expansion could be a bit sluggish in FY19. Are you concerned? What is the outlook on your margins? What are your internal targets? Do you think that we could see your margins remaining depressed?
I think last year we had a very extraordinary round of margins. We increased our margins by almost 20-30 bips or maybe more, and we've also said in our investor calls that we would want to maintain a volume-led growth, and we would want to, if required, decrease our pricing so that we are not really focused only on driving profitability. We would rather have more customers coming onto our stores, and buying more products rather than building more profits by selling lesser products. So margins we would want to maintain at around 5.5 to 6% of PAT and around 10.5 to 11% of EBITDA. That is what we internally target, and that is what we would want to consistently roll out. Anything that we get over and above that, we would really want to invest that more into capacity building, into passing more benefits on to the consumers, so that we are able to get more traction and we are able to create a far sustainable and a growing business for the future.
Anand, great speaking with you. Thanks so much for taking the time out and chatting with us. Really puts into perspective as to why even in the mid-cap fall, your stock has been seeing a buying, and in the last 1 week itself, it's actually gained traction of more than 25%. Good chatting with you today.
Thank you.
Okay, that's the word coming in from the CFO at V-Mart, which has really been a buzzing stock.